If you've been watching the stock market lately, you know it's been a wild ride. Prices swing up and down, economic uncertainty, and talks of recession looming. It's enough to make anyone nervous about investing. But here's the good news. There's a trading strategy that thrives in this kind of chaos, and it's called swing trading. In today's video, we're diving into Swing Trading 101, a guide to profiting in today's turbulent markets. Everything I am covering in the video is for entertainment purposes. It's not investment advice, and I recommend paper trading and practice. We'll cover what swing trading is, its history, why it's perfect for times like these, and the exact steps to make successful trades. Plus, I'll walk you through the tools and platforms you need and give you a beginner-friendly intro to technical analysis. Whether you're brand new to trading or looking to adapt to these crazy times, this video is for you. Let's jump right in. Let's start with the basics. What is swing trading? It's a trading style where you hold stocks, ETFs, or other assets for a few days to a few weeks, aiming to capture profits from price swings. Unlike day trading, which is super fast-paced, swing trading gives you breathing room. Unlike long-term investing, you're not waiting years for returns. It's perfect for those who want to stay active in the market without being glued to their screens all day. Think of it as riding the market's waves. You get in when the price is primed to move and get out with a profit before the next big shift. And as we'll see, this flexibility is a huge advantage right now. To understand swing trading's power, let's look at its roots. Trading has been around forever, but swing trading started taking shape in the early 20th century. Traders like Jesse Livermore made millions by studying price patterns that moved over days or weeks. They saw that markets don't just go straight up or down, they swing. By the 1880s and 90s, technology changed everything. Computers and the internet let regular people like us access charts and trade from home. That's when swing trading really took off. And today, with powerful tools at your fingertips, it's easier than ever to jump in. Now let's talk about why swing trading is such an effective strategy in today's markets. Because let's face it, things are pretty turbulent out there. We're seeing wild price swings driven by inflation concerns, interest rate hikes, and fears of a potential recession. Long-term investors are sweating as stocks that looked solid a year ago are taking hits, big hits. So why does swing trading shine in this environment? Flexibility and volatility. First, swing trading thrives on volatility. When prices are jumping up and down, that's opportunity. Swing traders don't care if the market's bullish or bearish. They can profit from moves in either direction. For example, you might buy a stock bouncing off a support level one week and short a stock breaking down the next. This adaptability is key when markets are unpredictable, avoiding long-term risk. Second, holding stocks long-term or even into a recession isn't always a safe bet. It's made out to be. During the 2008 financial crisis, the S&P 500 dropped over 50%, and it took years for investors to recover. Another example is the Japanese stock market decline has taken over 30 years to restore prices, and some still have not regained. Even today, with economic uncertainty, companies can lose value fast if earnings disappoint or supply chains falter. Swing trading lets you avoid getting stuck in a stock that's tanking. You're in and out in days or weeks, locking in profits or cutting losses quickly. Third, capitalizing on short-term trends. Finally, swing trading lets you focus on short-term trends, which are often clearer than long-term predictions. Right now, sectors like tech or energy might surge for a few weeks due to news or policy changes, then cool off. Swing traders ride those waves without betting on where the market will be in 5 years. Compare that to long-term investing, where you're hoping your stock climbs despite recessions, policy shifts, or unexpected crises. Swing trading gives you control. You decide when to play and when to step back. In times like these, that's a huge edge. Okay, now that you see why swing trading is perfect for today's markets, let's break down how to make a successful trade. Here's a simple 5-step process. Step number 1, identify the trend. Check if the stock is in an uptrend, downtrend, or sideways pattern. Use a chart to spot higher highs and higher lows for uptrends, or lower highs and lower lows for downtrends. Trading with the trend boosts your odds. This is another video I will be making to help identify these patterns. Step number 2, find a setup. Look for an entry point, like a pullback to a support level in an uptrend or a breakout above resistance. Patience is everything. Wait for the setup to form. Step number 3, plan your trade. Set your entry price, stop loss to limit losses, and target price for profits. Step number 4, execute and manage. Place the trade and follow your plan. Check it daily or even few days, adjusting your stop loss upward in a winning trade to protect gains. Step number 5, review and learn. After the trade, analyze what happened. Did you stick to the plan? What can you improve? This is how you grow as a trader. These steps take practice, but they're your roadmap to consistent trades, especially in choppy markets. To trade effectively, you need the right tools. Luckily, you don't need to spend a fortune. Here's what every swing trader needs. Charting software, TradingView or Thinkorswim for analyzing charts with indicators. Free versions are great to start. A stock screener, FinViz or stock charts to find volatile stocks, perfect for swing trading. A brokerage account to place your trades, more on platforms on another video. Trading journal, log every trade in a spreadsheet to track what works. Calculator, a position size calculator keeps your risk low. Stick to 1 to 2% of your account per trade. These tools give you everything you need to navigate today's market with confidence. Where do you actually trade? Here are 3 platforms swing traders love, especially for beginners. Schwab, E-Trade, Thinkorswim. Use the charting and paper trading option to practice risk-free. Fidelity, low fees, easy to use, and great for researching swing trade ideas. Most have low or no minimums. A reliable platform is a must. Technical analysis is the heart of swing trading. It's how you predict price moves using charts. Don't worry, it's not as scary as it sounds. Here's a quick intro. Price action. Study the candlestick patterns to see buyer and seller behavior. A bullish engulfing candle can signal an uptrend. Support and resistance. Support is the price floor where stocks stop falling. Resistance is the ceiling. Trade at these levels for high probability setups. Moving averages. These show the trend. A 50-day moving average crossing above a 200-day is bullish. In volatile times, you may want to watch the shorter moving averages as well. Indicators. The RSI, Relative Strength Index, shows if a stock's overbought or oversold. Above 70, it might pull back soon. Start with support and resistance. They're simple and powerful, especially in volatile markets. That is a complete video in itself. Now let's wrap this up with 3 tips to kickstart your swing trading. Start with paper trading and practice, practice, practice. Start small. Use a small account to learn without stress. 2, stay disciplined. Follow your plan no matter what the market throws at you. Number 3, keep learning. Markets evolve, so keep studying to stay sharp. If you like this video, want more information on swing trading, give it a thumbs up. Subscribe below for more trading tips and education, and drop a comment. I'll catch you in the next video.